right. Well, we'll go ahead and get started with tonight's session. I want to thank all of you all for joining us on a Thursday night. I know that's not our normal night for these webinars, but if we had webinar on Tuesday night, I'm afraid most of you all may have been watching the exciting UK basketball game. So we decided to change it up this week, and so we could all root on the Cats, and they had a good game for us. So that worked out well. So we will go ahead and get started tonight. So we've got two speakers tonight that are probably quite familiar to all of you, but we've got Dr. Kenny Burdine and Kevin Laurent, and they are going to be tag teaming, talking about marketing opportunities and where we're going coming into spring. So with that, I will go ahead and turn it over to Kenny.
Thanks, Katie. Hello, everybody. Now, I will say this, Katie, when Dare asked Kevin and I about moving it to Thursday, he didn't say it was because people might be watching the game. He was afraid that Kevin and I would hurt attendance and viewership of the UK game. So that was my understanding of that. So I don't know. Maybe it was the other way around. Either way, good to be with everybody this evening. Just going to lay out a few things market related, and then Kevin's going to talk about some more value added type stuff. So he and I have kind of shared our thoughts back and forth the last 24 hours or so on what we're going to cover, and we'll kind of roll through this and answer questions at the end. So when we start thinking about opportunities in 2025 and the market itself, I think there's some underlying things we need to make sure we're aware of. One's obviously significant change in feed price. I'm just using this as a proxy for that. This is Southern Plains corn price, but obviously we've shaved, $3.50 or so off of corn price going back to early 2023. As we think about cost of gain in particular, this is relevant. We'll talk about that a little bit more later. I want to mention direct markets. I'm not going to talk about them much, but it was interesting back in the spring. I think it was April of last year. I had a chance to talk to the Kentucky Meat Processors Association, and they had asked me to talk about my expectations for the cattle markets, really for the rest of last year, this year, and beyond. And their concern was really centered around that cattle prices have gotten so high that producers aren't trying to meet value added markets. They're not pushing freezer beef and things like that, and they saw that as a constraint. We do a little freezer beef ourselves, small scale, and I think there is some consumer pushback in a sense. But if you look at retail price, the price of all our meats, beef in particular, at the grocery store has gone up. So yeah, we've had to raise our prices on freezer beef, I think, every year the last four, it seems like. But I really don't think that the issue has been so much on the consumer side as much as it has been simply producers just kind of being satisfied with the current market and not utilizing local processors for direct marketing. In terms of thinking about markets and where we're heading big picture, I use this to kind of set the tone to begin with in a lot of my programs. And you can see the year over year change here, 2023 4 and the projection for 2025. 2023 was our first drop in beef production in a while. That probably would have happened in 2021 had it not been for COVID and then drought in 2022. So we didn't see that drop until 2023. Interestingly enough, we're actually going to see higher production levels when the dust finally settles on 2024 and projections for lower beef production in 2025. And that's predicated on some change in heifer slaughter and things like that. I don't want to spend a lot of time on this, but exports have been such a big topic lately. I thought it would be worth just dropping a little bit of discussion in here. The U.S. has been both a net importer and a net exporter of beef in my career. We're a large net importer now, but it's a function, I think, of tight supplies and just needing a lot of trim to blend with some fairly fatty U.S. trim. But for some perspective on exports and individual trading partners, which I think kind of applies as we think about some of the discussions about tariffs and so forth that have been in the marketplace here lately. First point I want to make, in 2024, the vast majority, over 88% of our beef was consumed domestically that was produced. And I think that's important perspective. Japan was our largest export market. South Korea right behind it. But no individual country accounts for more than 2.4% of our beef production based on 2024 numbers anyway. The countries that get the most attention in the recent discussions have been China, Mexico, and Canada. And if you look at those together, you can see that we're looking at something in the ballpark of 1 to 2% to each of those countries. Um, Imports are important too. Australia, New Zealand, Uruguay, even Brazil to some extent, a lot of trim. I like to make the point though that while we are export dependent on Canada and Mexico, they're probably even more dependent on us as an import market. So I think that's important as we think about what could potentially transpire. That those are countries where two-way trade occurs, and I think that's worth pointing out. Um, Last year was an interesting one, in the sense that despite the fact that the cow herd was smaller and calf crop was smaller, cattle on feed numbers were almost stubbornly high. If I remember correctly, I think we had higher year over year cattle on feed numbers in 2024 for 8 out of the 12 months. I don't have a February 1 number yet. I will hear, that'll be next Friday, I guess. I don't have that yet, but for January, we were down a little bit from where we were last year. To me, this was really the story of the cattle markets in 2024. If you look at federally inspected slaughter, it was down 3%. Steer slaughter was essentially steady. Heifers were down a bit. The bulk of that was in reduced cow slaughter. But despite the fact that federal inspected slaughter was down, we almost perfectly offset that with higher weights and imports. And what I'm showing you in this particular chart is dressed weight. Again, this is steers, heifers, cows, everything. But the point is clear there that year over year, we added a lot of pounds to cattle. And when you've got high fed cattle prices, you've got high feeder cattle prices, and you've got inexpensive corn or relatively inexpensive corn, then the incentive is to just simply take cattle at heavier weights, and we did that last year. I alluded to this a second ago, but beef cow slaughter for 2024 was down almost 19%, something like 18.6%, I think was the actual number. It's early in the year. You can see the blue line there, 2025. We're running lower so far this year. Some of that could be weather driven, of course, and this is not a major cow harvest time, but it is worth pointing out that we pulled cow slaughter back a great deal last year. We've started out, there's let's see, four, there's 4 weeks worth of data that I've got now for weekly cow slaughter, and we're running below last year's levels again. And that's been part of me. I'm going to talk about feeders kind of from here on out, but I don't want to not put up a cull cow price chart. This monthly data is deceiving because I've just got one month of February. In January, we kind of ran up through the month. So that jump from January to February is a little bit deceiving. It's just based on the data that I had. You'll see the same thing on my feeder prices here in a minute. But, when I've got average dress boning cows in the 130s and average dressers, a dime above that in January and February, nonetheless, it speaks to just how strong this cull cow market's been. And I think that's also why we've seen a little bit of hesitancy to pull the trigger on, or sorry, a little quicker tendency to pull the trigger on some of these cows last year or so. Thinking about what we saw last year with feeders, we had some weakness in the market from July to September, saw some improvement in October. If you've heard me talk in person, I've shared this story, but I was in Stillwater, Oklahoma, the middle part of October, and all the talk was about how bad the winter wheat crop was and how bad it looked for grazing prospects. And over the course of the next few weeks, they started to get a lot of rain. From the end of September to the middle of November, they got a lot of rain. And that wheat crop all of a sudden went from, it looked horrid to something pretty darn strong. So a lot of those wheat grazers were trying to scramble to place calves on wheat. A lot of calves already moved due to drought. So that gave us some improvement in a time of year we typically don't see. And then, of course, the Sunday before Thanksgiving, New World screwworm was confirmed in southern Mexico. that closed the doors to Mexican feeder cattle imports, and those just resumed this past week. February's been a softer month. Granted, we're 2 weeks in. I don't even have a second week of price data yet to look at, but we had the resumption of imports from Mexico. For some perspective, through the first 11 months of 2024, they accounted for a little over 5% of our feeder cattle placements. If I just kind of look at them as a percentage of placements for the 11-month period, the trade uncertainty, trade talk isn't helping, and I don't know what to make of this AI testing in dairy and the impact of that. I think it's out there and it's having some impact. I would put it as the third on the list there of I think things that have impacted the market since into January, but it's been a pullback, but not alarmingly so. Same story here on my prices. Don't read too much into that blue line from January to February. State average last week, 550 pound steer was around the 310, 315 range, but I had groups in the 320s. Eight weights average something in the 240s, but again, I had groups in the 250s. So, the trend there's a little bit deceiving because the market literally went up week after week in January. And then I just have got one full week in February to compare it to. So it looks like an increase, but the markets are definitely softer in February than they were in January across the state. Before I get into some expectations and just kind of some thoughts and turn it over to Kevin, I will just kind of give you a quick overview of the inventory report and kind of my perspective on it. So let's rewind a year and think about the January 1, 2024 number. So that was revised downward in the 2025 report. So that ends up meaning that the estimated beef cow number is down by more than 3% from January 1, 23 to January 1, 24. The decrease from 2024 to 2025 was much smaller, about 0.5%. This hasn't changed. The cow herd is the smallest it's been since 1961. We would have to lose over 500,000 more cows to be under that 61 level. I don't think we'll get there, save another widespread drought. It looks to me like we're definitely leveling off. Heifer retention was down again as of January 1, and they went back and they revised downward 2024. So the story that I've been telling is that without question, cow herd liquidation is slowing, but it's doing so more because we've pulled back beef cow slaughter and not so much due to heifer retention. And what that means from my perspective, as we start thinking about 2026, is I don't think we can pull beef cow slaughter back enough for the number of heifers in the pipeline now to result in an increase in beef cow numbers come January 1, 2026. So I think we'll be down a small amount, probably something less than 0.5%. So something between 0.5% reduction and steady is what I would expect going into 2026. I'll talk Kentucky numbers for a second. They had our cow herd estimated down almost 40,000 cows. That's a significant percentage. That's 4%. I believe it. I thought we were down last year, to be honest with you, although it didn't show up. So we're definitely losing cows, and have been, I think, for a few years. This is true in a lot of places, but I think especially in Kentucky, land constraints are real. We've lost a lot of pasture. We lost a lot of pasture ground to row crop. In some places, urban pressure, even if it doesn't take a lot of ground, impacts the value of that ground. And that does matter as folks think about selling out cow herds and trying to find someone else to buy those cows and operate them. So it matters here. Economists are notorious for analyzing these year-over-year changes that fall within the margin of error of these reports, but just one observation is that if you look at, although beef cow numbers were down, there were higher estimates year over year in beef heifer retention, other heifers, and heavier steers, and that may point to some interest in heifer development programs in 2025. I also think it kind of confirms what a lot of the county agents on this call had told me back in January, was that they were seeing somewhat of a shift away from cow calf and towards more margin operations, backgrounding and stock bringing. And I think that could be reflected somewhat in this report. Truth is, we're going to expand this cow herd. It's just a question of when. And when I say that, I'm thinking nationally, not necessarily in Kentucky, although I think we may add some cows in the state. I think the bulk of our growth is going to occur in the southern plains and the northern plains. And if you look at where beef cow numbers did increase during the course of 2024, it was Texas, Oklahoma, and the Dakotas that kind of stood out. We need the three P's to encourage cow expansion. We need profit, we need pasture, we need patience. Profit's there, but it's fairly young. I've said this several times, but we went 7 years and 4 months and never saw the average price of that 550-pound steer in Kentucky exceed $2 a pound on a monthly basis. So I think you've got some recovery capital going on, and maybe that's some hesitancy. It was dry in a lot of cattle country in 2024. We got dry multiple times in the state. We would get we would get rain about when it was almost too late to help, and then we'd get some. But if weather cooperates, especially in the rural heavy cattle areas, I think we could certainly see some more heifer retention, I should say, in 2025. But the land constraint thing matters, and I think interest rates matter too. And it takes a lot more patience to grow a cow herd in this interest rate environment than it did back in 2014 and 2015. So I think the cow herd is going to be smaller. The cow herd is smaller in 2025. I think it'll be smaller again in 2026. The only question, I guess, is how much heifer retention we see, because that also impacts how many calves move through these markets. This February pullback, it's not that alarming to me. I mentioned a few factors. I still think fundamentally we're in good shape, and we're doing this in mid-February. We're probably 6 to 8 weeks from grass, and you put green grass on this market as tight as supplies are, and I feel really good about this spring calf market. I think this calf market by spring, when I'm thinking like April, can average where it was kind of at its peak in January. I could see those 5 weights in Kentucky averaging, around 320 or so, and I can see, higher quality groups, value added calves in the 330s and 340s. As we get into midsummer to early fall, I think these mid 8 weight cattle in groups are going to push up into the 260s. You've got some in the 250s right now, but I could see them being even stronger when we get into their typical peak in summer and fall. I'm going to finish with a few thoughts here and turn things over to Kevin, listen to him, and then we'll answer questions, of course, when we're done. But for margin operators, I'm thinking, backgrounders, feed-based operations now, but also stock operators this spring. Utilize all feeding options. And I think one advantage we really have here is we've got a lot of different ways to add gain to cattle. We are a forage-based state in a lot of ways, and that's one that comes to mind. A lot of commodity feeds, a lot of byproducts. There's a lot of ways that we can add gain, and I think we can do it competitively. And I think that's kind of an advantage for us. So utilize that. Be opportunistic and flexible. Margin operations, there's almost always opportunity, but you got to be flexible sometimes on the type of cattle that you buy. Do you buy steers? Do you buy heifers? Do you buy 4 weights? Do you buy 5 weights? So look at things like that. Also be aware that sometimes you can make money by just simply being strategic about when you buy. So, think about kind of a simple backgrounding program where I buy 500-pound steers and sell 800-pound steers, just kind of for the sake of argument. If the futures market jumps such that the expectation of those 800-pound steers, 4 and 5 months down the road is $10 a hundredweight higher, when that translates back to what I can pay for that 500-pound steer, I can actually pay about $16 a hundredweight more for him. another way to say that is if the feeder cattle board jumps by 10 cents and calf prices jump by 10 cents, those calves are actually a better buy than they were the previous week. So look for things like that. You're running budgets all the time and manage price risk. I'm not going to have time to walk through a lot of details here, but I did want to show you this. This is a bull market, and thanks to my buddy Griff for the picture there. But if you look at nearby feeder cattle futures, and I've got the last 23 and a half months. This goes back to January 1, well, actually January 2nd, I guess, of 2023, and it goes through yesterday. We've added over 80 cents to the value of feeder cattle during that time. But I can go in here and I can circle some windows when the market dropped pretty sharply. This time period in 2023, we saw the market drop by 40, I think it was 47 bucks a hundredweight. This time period in 2024 was about 30 bucks a hundredweight. So even in a bull market, there is risk exposure and reason to manage downside price risk. Last few thoughts for cow-calf operations, and I think this will also feed into what Kevin's going to talk about pretty well. Don't be dollars per pound rich and dollars per head poor, and that may not be the best way to word it, but I'm always leery when someone brags about price per pound because they don't always tell me what the weight was. And the very first bullet there, that's really about what our state average prices were like in December of last year. 450s at 330 a pound and 550s at $3 a pound. And we're not used to these price levels. So seeing that 30-cent break on that 100 pounds looks like a really steep discount. And there's a tendency to want to move cattle earlier when we perceive a big price break. But the reason I put this together is to make the point that, look how much more those five weights, even 30 cents less a pound, are worth $165 more per head. And yeah, I can add that. I can add 100 pounds for that kind of money 6 days a week and twice on Sunday. The other thing that I guess I would say is, the fundamentals look really good. In terms of return to the cow-calf level, it was way stronger in 2024. I think it's probably even better in 2025 and should be good in 2026. So, if you're someone who wants to be running more cows, or that's your goal, and you're already a low cost producer, or you have a lot of overhead, that may make sense. But my bias is that more operations probably should not think about running more cows, but should instead utilize the increased income they're kind of enjoying now and should in 2025 and 2026, and focus on simply being more efficient and making more money on the cows they have. So the point being here, there's ways to invest in your cow herd besides adding more cows. Grazing system so that you can graze longer and be less dependent on stored feed. Improvements in genetics. Kevin's going to talk about some things where I think facilities are handy to be able to work cattle and do some things to add value. And I think if you're not set up to do that, all of those I think are good ways to think about utilizing, some increased income. Back to the good old fashioned, finance stuff, paying down debt is a good strategy when you can do it, right? Because it lowers your overall cost structure. Building up working capital can be a good strategy because it lowers your dependent on operating lines that frankly come at a higher cost now. So think about things like that. The point being, you're going to have income opportunity, and how you use it is up to you. But just don't think blindly that expanding the cow herd is the only option you have. You've got a lot of ways to do that. And then finally, hopefully this leads into Kevin's talk pretty well, but just don't stop being a good manager. I think sometimes it's easy. It's easy in a down market to become frustrated and not worry about adding value as much. And then I think sometimes in a strong market, it's easy to become kind of lax and become satisfied. But I do think good management pays most of the time. So even in a strong market like this one, don't stop being a good manager. Don't stop looking to add value. Sell what the market wants. And that's usually a very good marketing strategy. With that, I will close my comments and I will listen to Kevin.
Real quick, while we're switching out screens, feel free to type any questions that you guys have for speakers in the chat and we'll get them answered at the end.
That's good.
All right. Can everybody hear me okay?
Yep.
Are we good, Katie? Okay. All right. I I think if Kenny and I would have tried to plan now this thing was going to mesh, we probably would have messed it up. But I think dumb luck, Kenny. I think our deals just sort of dovetail each other how this came together. Um, the vast majority of my time in the last, well, I'd say going on 6 years now is working with the PVAP program. And so I've got a lot of results to to kind of present there. I've been doing lots and lots of number crunching, and we're going into what our 7th year of PVAP. And so we're starting to build a database that's pretty interesting. So I'm going to present that, and then I'm going to talk about some current market opportunities that our market is kind of showing us right now, or maybe lending itself to maybe we can take advantage of. So let's talk about PVAP. So PVAP stands for Post-weaning Value Added Program, and it was a program that we started in 2019 to help producers, realize the economic benefit of weaning and precondition their calves prior to marketing. And so the original intent of that program was to go after producers who had never really done this before and try to get them on board and walk them through it. And it was fairly successful. I mean, we stubbed our toe on a few particular instances. The biggest problem was it was hard to convince a lot of people to do it, and so we're still, reaching that bottom third or that middle third sometimes can still be a challenge from an extension education standpoint. But overall, I would declare that attempt a pretty good success. Now, after those first 4 years, we were reevaluating our aim in this, and we thought, you know what? And I was getting a lot of feedback from some of the folks who I've worked with, CPH sales and those kind of, in Western Kentucky, we have what was the red tag sale at Ledbetter, and those kind of producers saying, well, we've been doing this for 10, 15, 20 years, where where do we get to have a little benefit from a program like this? And I got to thinking about that, and really and I think they were motivated not just to get a little incentive money. I think they were motivated because they were proud. They were proud of what they'd been doing. They've been producing really good calves, and you know what? They were wanting to show their stuff. And I got to thinking about that, and I said, well, why not? Let's try to build a database to where we can maybe see how is their preconditioning enterprise. Let's see how successful there is. And so that's kind of a target. Now we'll still take on folks who have never done it before. All right, but I am going after any producer that's experienced and wants to precondition calves. So what the requirements of this program is, and we call it advanced PVAP now. We're looking for Kentucky cow-calf producers, have to be home-raised calves, so not backgrounders, right? And or not bought calves, I should say. The biggest thing is we got to get folks to wean the way the calves at weaning, and that can sometimes be a challenge. Even a lot of our good producers, we get busy and we just don't get them weighed, or we bought scales with cost share. These cost share programs going on almost 30 years, and maybe the scales don't work like they used to, and we never have fixed them, right? But we can get a weight at weaning, and we will take truck weights. I mean, they can load them up on a trailer and go over some truck scales. So we're not going to let on-farm weights be the sticking point, right? But we need that weight at weaning so we can, establish what the value of that calf is at weaning to begin with, right? We're going to wean them a minimum of 60 days. CPH is going to 60 days. Just about every precondition program now is a 60-day minimum, and so we reflect that. A complete health program. If you're in any kind of specific precondition program, whether it's a breeder sale sponsored or one of the stockyard sponsored programs, whatever the case may be, most all of those programs are going to be a four-way viral vaccine and booster type, two-shot regimen, and then also vaccinated for Clostridium blackleg, and then and most of them include a Mannheimia or what we used to call Pastorella type vaccine, and then a deworming, prior, post weaning. Then the other requirements, we've got a worksheet, and I'll show you here in a second. Record all the feed and health expenses, from weaning time on. Something we've added and that we still haven't fleshed out how we're going to use this, but we're asking folks to give us their registration numbers of the possible sires of the calves, and that's not a hard and fast requirement. But if you can share any of that, maybe Dr. Bullock and I might can with his help, maybe we can get some use out of that. You've got a worksheet that you can complete with these feed and health expenses. And then we want you to give us a copy of your sale-born check stub when you sell these calves. And so that way we can get the bottom line, what was the actual pay weight, what were the deductions, what was the cost of selling and whatnot. And that, of course, that's our closing value that we take all the expenses off of. So when you turn in the worksheet, the check stub, what we will do on our side, we're going to calculate a one-page performance economic closeout, and I'll show you a couple of examples here in a minute. And then just for all your troubles, we're going to give you an incentive payment of $25 per head up to a maximum of $750. So, a 30 head group will max out your incentive payment, right? And this program is, I should say here, is one of our Ag Development Board programs, and we administer it through Kentucky Beef Network. Here's a copy of the PVAP worksheet. You can see where we've got, your contact information right here. This is where you put your weaning weights. You don't have to do heifers and steers separately. If you can, that's fine. If you want to put them all on a gooseneck and run down to the local feed store or wherever, granary, and get a truck weight, that's fine too. But we'll have this. Here's something that's real important. We want you to describe how you weighed them. Did you weigh them on the farm individually, or did you load them and go several miles down the road? Because what we try to do is estimate what that shrink would be, or adjust that weight to what the shrink would be if you went on how you would have sold those calves as a ball and calf, right? So for example, if you weighed them individually on the farm and then you would have sold them in a weigh out sale, say in central Kentucky, and maybe even stood them overnight, we're going to take 5-6% shrink off of that on farm weight, right? Because that calf is going to lose 3% on the road going to the sale barn, and probably another percent or two standing waiting, especially if it's an overnight stand to sell. So we want that. We want to take the farm weight or whatever weight we gather at weaning and try to represent as much. Try to make it the best representative or best estimate of what we think that calf's pay weight would have been if you would have sold at weaning, and then that's the weight we use. Now, that of all of this, that is probably the biggest estimate, if you will, that we do. Everything else is pretty black and white, right? So we're going to establish what the value of that calf is, and we can do that off of market reports. Same way at the sale. How did you sell that calf? Was it in a weigh out sale? Was it maybe in a weigh in sale, commingled sale, like a CPH sale, like where I was at today? So where the calves weighed on arrival. So those kind of things. So we try to equalize the weigh up on that. So here's you record your health expenses. I mean your health expenses and practices here on this part of the sheet. So it's a 2-page worksheet. And then here's your feed expenses down here. And I want you to give me your concentrate, your hay and forage, and your mineral. Probably the hay and forage is the one that's a little bit more, a little more gray area there. I feel real confident when folks tell me what they feed on concentrate. Why? Because you're writing a check for that concentrate, right? It's a direct check you're writing to a feed mill. Hay and forage, we all like to think we know what our hay weighs. We really, a lot of times don't. And then there's that whole age-old problem of how do you determine hay intake? Is it hay intake or hay disappearance? If you're paying for it for a feeding program, hay disappearance is your cost, right? If you're, nutritionists will talk about hay intake, but when you're feeding and the actual economics of it, hay disappearance, what hay you used during a feeding time is what's important. So, we can go back and forth on that, and usually I do some phone calling, and I talk to the producers and say, make sure we flesh that out if something that they provide doesn't really look reasonable, right? Also, pasture. How do we value pasture costs? And that's where I lean on my good friend Dr. Burdine here, and he helps me with some of the pasture budgets, and we try to prorate and come up with that if it's a grain on pasture type regimen, right? And then of course the minerals. So that's the worksheet. So we turn that in. You turn in your check stub, and this is what you're going to receive as a producer. You're going to receive a closeout, a one-page closeout. And I'd like to walk you through this closeout, maybe in detail on this one, and then just hit some high points on the second one. Um, this was a Western Kentucky producer, weaned their calves in September, middle of September. Kind of an early weaning date for a lot of spring calvers. He sells in December, CPH sale in this case, 85-day feeding period. So it's pretty fairly long feeding period. I will jump, not to get off on a tangent, but this producer weans early because he's in a rotational grazing system. And when he comes off, he actually starts feeding dry hay to his, I mean, hay to his dry cows. And he lets his whole farm as much as possible stockpile. And he doesn't go back on that stockpile until about, 3 or 4 weeks prior to calving, in that January period. And then he calves out on stockpile grass. Kind of a unique operation, but that is why he weans so early. He's trying to stockpile most of his ground. So another subject for another day. But back to the closeout, you can see the head count here, heifer steers. Here's what the weights he turned in. This is how I adjusted those weights. And I took a 4% shrink off of these weights, right? I took a 4% because if he would have sold these calves at weaning, he is approximately, here the devil's in the detail. He's 35 miles from Guthrie, where he would have sold the calves at weaning. He's 35 miles. I took 3%, and then I took an additional 1% off for additional standing in line and whatever the case may be. As far as getting to the scales, right? So that's the weight we use. Look these numbers up on the archives of the market report, and you can see down here. This was the Guthrie average price for 624 heifers and steers, September 19th. So the closest date I can get to his weaning date, right? So that's how we establish that beginning value, right? You can see commission at weaning and commission at preconditioned sale. This particular sale gives folks a break whenever they sell CPH. So this is the normal commission charges that would be associated with selling on a normal sale day at this particular yard, and then this is what the sale charge would be at the CPH sale. So these calves were sold in the CPH. These are the actual weights taken off of the check stub, actual price here, and so on. I added something this year, and I went back and looked all these up. Talk about took several days of tedious work, but I got all of this, the price that they sold for versus the state average for that particular week. So what did he sell? He sold December 10th. So the average in the state, December 10th, were these two figures, right? How did that compare on a weighted average to what he sold his calves for? In this case, he sold his calves sold for 1208 over the state average for that particular week in this particular sale. So really, really nice sale, right? So all of this weaves into our costs and returns down here. Okay, so here's our health cost, our feed cost, interest. All this is being fed from the worksheet. Okay, and I've got details down here. He fed 9 pounds of a 14% concentrate, 212 a ton, and so on. Right. So like I said, all the details are here at the bottom. And I even put a 6% interest. I bumped that up over when we first started. I think we're in that 3 or 4%, but interest rates have gone up. So this is kind of a middle ground between an opportunity cost interest and what you would do if you were actually borrowing money, if this was a true backgrounding program and you were borrowing money to buy this feeder at this value up here, right? So kind of a middle ground interest rate just to try to make it kind of as fair as possible. Here's our total net added value for what? For the 41 head. This particular producer added to their bottom line $12,600 by keeping those calves 85 days post weaning, right? Here's the dollars net added value per head, 308, right? Down here, I've got kind of the performance factors. Here's your gain per head, heifers versus steers, average daily gain, right around 2 pounds a day, and a feed cost per pound of gain. So that's the kind of detail we have in our closeout. Now, our next closeout, Central Kentucky producer, same time frame, weaned in October, sold in one of the breeder sponsored sales in Lexington. It was a 60-day, so minimum weaning time. Had a little different feeding program and a whole lot more cattle, 136 head in this case. Had a whale of a sale. Their cattle in this sale, this particular sale, sold $23 over the market for that week, right? You can see the details here, a little more shrink, a little more difference in how the cattle were handled, and I've tried to, reflect that down here. $332 more per head, net average per head over selling at weaning. Now, reason I wanted to include this particular person is because the uniqueness of this person's feeding program. Only fed about 7.5 pounds of a concentrate. Look right here, alfalfa haylage. Okay, does a real good job. This is the second year I do a closeout on this particular producer. Has really good luck with alfalfa haylage. Can reduce a little bit of his protein supplement, a little better gain, right? But he had a shorter time to get that gain done, right? And that's the thing that we're starting to learn is trying to match these feeding programs to your marketing program. Are you going to grow them a little longer and slower to get the total gain? Or are you going to grow them a little faster and quicker to get the total gain? Because gain can really help you overcome, rollback. So just to move on, post weaning, here's just kind of a map of the state. So we've done mainly in Western Kentucky, but we've had several folks over here in Central Kentucky, and how many closeouts we've had since it began. Advanced PVAP, we're up to 40, and I've got 5 closeouts I still need to do that would go in this calendar year. So to move on, let's see, I got to move this thing here. I don't know if you can see the end of this. Can y'all see let me see. I don't know if does that help any to do that?
You can see
If
the
you
whole
look
table,
here,
Kevin.
what's that?
You can see the whole table.
Okay, good. So here's the PVAP numbers, advanced PVAP, and then the total, right? And all the different ingredients, and we're not going to go through all those, but I want to highlight a few things. So remember our regular PVAP, our original PVAP was beginning producers, right? And so a lot of times, maybe recommendations wasn't followed quite as directly, and you could point out certain things. But in general, they didn't wean quite as long. They didn't feed quite as heavy. Our advanced PVAP folks are a little more well versed at the whole preconditioning game, right? So a little bit of difference here. Over here, big difference in average net added value over for our advanced versus PVAP. Now realize this is better markets, better value gain. Look at here, we're a whole dollar a pound more during this time period, right? Because we're in a different part of the cycle. So I realize a lot of this difference obviously is just a better market. However, look right here. Look right here. That's a $5 per hundredweight difference in price versus state, as far as premium. And this is just me, my opinion. I think a lot of that is because these folks are more experienced. They're more locked into a marketing program to go along with their feeding program. Some of these are some of our old CPH folks in Western Kentucky. Some of these are in our breeder sponsored sales that are becoming much more popular in Central Kentucky. So I think we've got folks here that are more locked into a marketing plan as opposed to some of our beginners, right? And so I think that's something worth noting, and that makes up some of that difference, right? Here's just real quickly, I just the stuff shaded in blue is what this fall precondition period looks like versus the rest of the year. We start our year in general in April, and then we end it in basically February. So we can, our first fall born calves can go to town in April maybe, and our last spring born calves usually are getting sold like what was sold today at the CPH sale I was working at today. So I just wanted to point out, look how lucrative weaning a calf this fall was. I mean, the market was rewarding it, right? And the overall market trumps all of this, right? I mean, you can have the best feeding program, whatnot. If you have a down market like what what Kenny showed on that graph and those red circles on where the market took a downturn, it can still come back to bite you. Good example, last December. If I had the chart up here with last December CPH sale, December a year ago, 2023, and we had some of these negative type numbers there. So what have we learned with PVAP? We have learned that 73 out of our 77 closeouts, that's 95% almost, had positive net returns to wean these calves and feed them for a while. The range was minus $36 to a high of $374. We had 39 closeouts that were under $100 per head, and they averaged $47. So not nothing to get really excited about, right? A lot of that was in our first few years, all right, in that 2019-20 range. 38 closeouts were over $100 a head, and they averaged 225. So that looks pretty good. 65 out of our 77 closeout, or 84% of the times, the calves sold higher than the state average. And again, like I pointed out, look at the difference between our inexperienced, if you will, versus our experienced preconditioners, and that difference there. So like this says, I really think that's coupled with a locked into better marketing program too. Here's what I like. This is real world data. Now we can shoot little holes in it. We can say, well, this is an estimate, that's an estimate. As long as we keep building these numbers, we're going to learn some things, real numbers, real feed numbers, real producer figures on what they're doing, what's working, what's the result, right? And I think this really helps folks like, well, me, whenever I do ration plans or marketing plans and tying those two together. Dr. VanValin, when she's working with folks trying to tie feeding to marketing, and Dr. Lemcooler, and I think we can use this data in a multitude of ways, right? So I think I'm going to take about 3 or 4 minutes to hit what's happening right now. Here's a picture from the sale I was at today that Maggie took here for us when we were at the CPH sale there at Guthrie. And what I like to talk about whenever I'm talking about adding value is staying out of the UT orange, right, and staying up here in the UK blue, right? And so a lot of times, if we can keep from getting discounts and get our calves from that average run of the mill. We might have good calves, but are we really doing a good job adding value and marketing them into what the market will pay for? First thing is, if we can get them in 10 or more head lots, that's a big thing. Dr. Burdine's got research that, that slide, we've all seen it a lot of times. That's where you get your biggest bang for the buck, is getting from a single to say 10 or more head. We can wean and precondition. I wish I could summarize the data today. Our CPH calves are running against some weaned one owner lots today, and they were also running against some regular unweaned lots. I'm gonna tell you, there were some one owner lots that could have been CPH calves. They had everything done to them, just did not have the blue tag in the ear, and they sold just as good, or maybe even a case or two better, because they were one owner cattle. Because one owner cattle are worth a lot, all right, from a sickness standpoint. And that's what sold today really high. The unweaned and the commingled unweaned stuff, not so much. So just getting them weaned and letting your market operator know what you're doing can really help you, right? Because we can't all be a one owner load lot, right? But we can be a one owner wean lot, maybe of 10 head or more, right? And then what some of our breeders sales are doing, they're tapping into this genetics aspect too, and putting that known genetics on it. Talk to the market reporter today. Here's just a February 10th report that came out Monday. And just to kind of show you where some of these numbers, where we go to get this, we've got a great marketing service here in the state. And look at the difference here in different classes here. Our heavy four weights here, 335, value added 365, right? Those kind of things. So there's some incentive to do this. Had a good talk with the market reporter today there at Guthrie, and he kind of educated me on what they're really trying to define value added now. Value added in general, and it's not ironclad, but in general, they like to see calves over 500 pounds, weaned and preconditioned, and selling in lots of 10 or more head. And I thought that was interesting. That was the most distinct or detailed definition of value added. Now, he was the first to admit that there's some wiggle room there. If you get a good set of four weights and they meet most of these criteria, they will label them value added, right? Now, just because you do all this doesn't necessarily mean that your cattle are going to sell at a premium. But think about it, you're increasing your chances, right? I want to finish with these just to kind of touch on what Kenny was saying about the getting caught up in the dollars per head and I mean the cents per pound versus dollars per head. I'm gonna walk y'all through this. Here's that last week's market for average prices for bulls, steers, and value-added steers, right? Here is the number that was recorded from those market reporters. This kind of backs up what our market reporter told me today. Sees low numbers of value added in this 3 and 4 weight category. A lot bigger numbers, more significant numbers here. And a lot of bulls are still going to town here on the state report. Look at this. There's a lot of bulls compared to what the steer numbers are, right? So we're still got folks not taking advantage, here, just the difference of steer versus bulls and the 3 weights. Look how it rises as that calf gets bigger. It gets to be more of a chore, more of a problem. Now, let's convert that to price dollars per head, okay? Dollars per head. Took those same prices and just simply multiplied them by these weights right here. Look at the difference in in dollars per head, steers versus bulls, and then the value added, right? And so we've got an opportunity here to add some value. But here's the thing: let's say we're sitting on bulls and we're gonna try to wean and precondition. Well, we want to cut this bull, and we're gonna hopefully put some gain on him. So we're gonna turn him in to the next weight class up. So let's see what we can do there. Let's just skip this slide. We can see the big discount here. Just for sake of time here. Well, let me just point out here we cut the bull. If we put one implant, a lot of people push back and say, well, bull's going to be heavier at weaning. Well, if we can cut that bull and put one implant in that calf, he'll be as heavy at weaning as if he was left intact. So there's no reason not to cut those bulls. So let me jump to this. I got ahead of myself here. So for each additional 100 pounds, look at where we're going. Okay. So steer to steer. So this is right here, this column, a 3-weight steer going to a 4-weight steer. There's a $230 difference in dollars per head. Kind of backs up what Dr. Burdine was saying on his deal, right? Look how it, from a steer to a value added steer. Now we may not be guaranteed to get this, but we have a potential to capture even more, right? What about a bull to steer? Okay. So bull to steer, 301. Okay. Now let's see what we do if we take a steer and move it from a 3-weight to a 4-weight. We've got 230, right, to work with. So that means for 100 pounds, we've got to put that gain on for less than $2.30 a pound. I didn't put that figure in my PVAP data, but I went back and calculated it. Our total cost of gain, not just feed cost of gain, total cost of gain in the last year, calendar year, so current feed prices, has been running around 99 cents a pound. So if we can put gain on total cost, that includes health costs and everything, interest and all, if we can put that on for about $1 a pound, I think we've got some room here to make $1, right? What about if we take a steer and turn it by doing that, if it's called a value added steer and sells as such? We've got 378 potentially maybe to gain, right? What about the ultimate if we take this bull, this little light bull, and don't cash him in at $1,200, at that 350 or whatever a pound it was. Let's make him a steer weighing 4-weight. We've got the potential to capture here. And so we could do all these iterations as we go down, but suffice it to say, here we could take a bull. Let's see, but the ultimate would be maybe even get it to value added. But there's some opportunity here in this market. There's some definite opportunity in this market to take these light calves and make them attractive. Talk to a backgrounder today. He's looking for 3-weight calves that he can take and make into a 5-weight calf that's hard and ready to go in April. And think about that strategy. He's going to take these 3-weight calves that these cow-calf folks are just dumping on the market, and he's gonna get them straightened out to where that person with grass fever, that grazer or backgrounder, make them attractive for him to turn out in April. Who knows what that kind of package would be, one that's ready to go. So didn't want to take too much time, but I I thought it was good to touch on some of the opportunities I think that the market's giving us right now. Just sit down with your calculator, look at a market report, and I think you can learn a lot from some of these kind of numbers.
All right. Well, let's go ahead and if you guys have questions, we'll put those in the chat for both of our speakers. And I am going to go ahead and share my screen and get this code up there for you all. Just a couple housekeeping things while y'all are thinking of some questions for the chat. Um, the CAPE code for tonight is UK market. Remember that can go on your CAPE education form. Just put it there in the presenter line. But that does have to be approved by your county agent. Another couple programs of interest coming up starting next week. We've got Mid-South Stalker Conference webinar. We'll have two of those, February 18th and February 25th. You do have to register in advance, and you have to register for each night separately. So I want to make sure folks understand that you have to do those separately. And then our next webinar on here will be March 11th. So I've got a question for you, Kevin. As you've kind of gone through a lot of these now, what do you think is maybe a mistake or an oversight or something that folks make that maybe makes them less successful in this preconditioning?
That's a good question, Katie. And probably the thing I would say is not having that calf ready for weaning. From the day it's weaned until you sell, well, whether you background or precondition 60 days, 90 days, whatever, you want that calf to be ready to grow, grow, get over that stress of weaning from day one. Is what I mean by that is not having the calf dewormed, especially not having them castrated. I mean, we got to get these calves castrated back, prior to 3 months of age. Get them castrated. If you're in a program where it's okay to implant, castrate, put an implant. I think rail growth can be done 30 days of age, Cinevex 45 days of age. Get that implant in them after castration and have that calf ready. May even do a pre-weaning shot. Pour some feed out on the ground 2 or 3 times, a week for the last 2 or 3 weeks they're on the cow. Have that calf eat some feed on the ground with its mom. Have the calf and the cow come into the weaning pen and know, maybe shut them up overnight in the weaning pen a time or two with their mom and let them find the water and know what the water trough is and that kind of thing. Any of those little tricks can get over that stress of weaning and have that calf ready to go at weaning time. And I think that's kind of what our advanced PVAP, if you want to call them that, I think that's where they kind of have an incentive. They've been doing this and they kind of know some of those management tricks. So.
All right, we have a question that came through. Wanted to know if that worksheet or your Excel spreadsheet there is something that we can help producers in the future put together without going through PVAP. Um, this is coming from Carol Hinton, one of our county agents.
Right. And Carol has a county that has had several PVAP participants. And Carol, that is a good question. And I would like somebody that's better at spreadsheets, maybe Dr. Burdine here can put his eyes on it. We need to make it to where it's kind of foolproof and not so specific to me knowing the little tricks of my own spreadsheet, so to speak. But yeah, I think if we make it user friendly, I think that's a good idea, and I think that would be good for our county agents to have to help because we're not going to have this money to do this incentive payment, and I don't have enough time. I'm gonna tell you, it takes couple hours at least if everything's right for me to get one of these closeouts processed and I got to shut my door and not get distracted. It's a man. Maybe it's just my feeble mind, Kenny, but there's a lot of little nuances to this, and I want to try to make it as right as possible. So, but no, it's a good question and good idea too, Carol.
Okay. The next question that came through, and I'm happy to jump in on this one as well. Does UK have a vaccination program that makes it easier and more affordable for producers?
Uh, no, I mean, we've got recommendations. I guess I don't know exactly what they're asking. We don't have a program where we subsidize their vaccination program. Most of our health costs in this town, I want to say it was on there. I think it averages about $15 a head. is, in that $15-16 a head range is what deworming and those vaccines cost or have cost over the life of this program so far. But well, I mean, we're very willing to give some recommendations with the help of Dr. Arnold and that kind of thing. What's the latest and greatest? But yeah, it's pretty straightforward. If they can work through their county agent, we can get some recommendations to them if that's what they mean.
Yeah, I know Dr. Arnold has a really handy resource that I reference from time to time where she kind of compares all the vaccines across manufacturers, so you kind of know apples to apples what each of the vaccines is called from each manufacturer and kind of compare and contrast on that.
Right.
I think a lot of times, it's obviously looking if you are going to market into some of these preconditioned sales, some of those have specific requirements that you need to be aware of too when you're working through that health protocol. Have any more questions for our speakers tonight? I'm gonna share my screen one more time. I apologize. I lost the chat when I put it up here earlier, so I took it back down. But if you all don't have any other questions, then that's all we've got for you tonight, and we hope to see you guys back next week with the Mid-South Stalker Conference webinars, and then next month with this webinar series as well. And of course, if you have any questions that come up in the meantime, please reach out to your local county agent, and they can certainly help get you in touch with us. So I think everybody's so excited about where the market's going. That's they're celebrating where we're at. So with that, we thank y'all for joining us, and we'll see y'all next week or next month. Sorry.